Hi, everyone. On today's episode of the Brisbane Property Podcast, we're going to be exploring why a lot of buyers get stuck after securing their pre-approval. And we've got a special guest, Barry Wilkinson from SW Brokerage, here to talk us through many of the pain points that buyers have throughout this journey. We hope you like this episode.
Welcome to the Brisbane Property Podcast with your hosts, Melinda and Scott Jennison.
Hi, everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And we've got a special guest today. We've got Barry Wilkinson from SW Brokerage. Welcome, Barry.
Thanks very much, Scott, mate. Very pleased to be here. And Mel, thank you very much for having me, actually.
You're welcome. Barry, we obviously have been working together over several months to help mutual clients. Really what we're going to break down today is getting an understanding of some new data that's just been released in relation to the number of people that get pre-approvals and then just stall and don't actually then push forward to make that purchase. And obviously then, that pre-approval expires and it just starts this spiral of, market keeps shifting. We need to reapply for pre-approval. So for buyers out there that might find themselves in this exact scenario, this episode is definitely for you, and we're going to really break it down and give some practical tips to help you to actually move ahead.
Barry, before we get into it, I always have a bit of a chat to people and tell people the weather, how good it is in Brisbane, but I won't jump into that today. What's your favourite coffee?
Oh, Piccolo.
Piccolo?
Grew up around Italians all my life, mate, so I'm a Piccolo man. It should be with no milk, but Piccolo small.
Very good. It's always nice to sort of break it up and get to know people a bit more. So I'll remember the Piccolo next time we catch up.
It used to be flat white, but then I moved past the old milk, right?
Yeah.
Anyway.
Sport team?
I'm from Scotland originally. I support a team called Glasgow Celtic, born Scotsman, and love them. I've even got a tattoo on my back of it, but love it.
And that is your favourite sport? We'll call it
football,
soccer. Aussies call it soccer,
football, mate. Yeah, 100%. But I have to admit, obviously, as you can hear by the accent, I do love my rugby league and a little bit AFL, but probably and rugby. I went to a rugby school, but football's where it's at.
Any sort of sport, really?
Yeah, mate. Sitting around a bar with a beer, watching sport. Can't go wrong.
Barry, tell us a little bit about your background, how you got into finance broking and, your business, SW Brokerage as well.
Yeah, so I came across to Australia when I was 7. My father was an ex-professional footballer back in the UK. Came over here to finish his football career, and I then wanted to emulate his footsteps. And then I went back to Scotland when I was 19 for 4 to 5 years. And then I signed with the same clubs he did, but never reached his heights. But and then the reason I mentioned that is then I came back to Australia just disorientated with obviously the dream that had been burst. And then my sister worked for Suncorp, and I literally got a job working in the call centre. And I was there, which I detested because it was all timelines that you have to adhere to. And it was in the personal loan section. And then there was a mobile lending boss that was walking around the floor, and I just said to him, how does that work? And cut a long story short, I probably spent maybe 4 months with one guy in particular after hours that I went with to understand how it worked. And then an opportunity opened where one guy left. And then he said, look, we'll give you a crack. And I got my car keys and he said, you'll either sink or swim. My first home loan appointment that I ever did got a big 2-page complaint. The training was abysmal. And then in 2024, I jumped ship to become a finance broker. And now I'm blessed with a small brokerage based in Brisbane and Burleigh. We just opened up. There's a team of 10. And honestly, hand on heart, that's how I obviously transit. Now, it's not all been glitz and glamour.
No.
One thing I will particularly mention, because for your listeners to understand, in 2011, the franchise that I did buy went into liquidation, into administration, and then that was, for 12 months, it was probably the most humbling experience of my life, where I was probably about 5 days away from bankruptcy.
Wow.
And that was the game changer.
Just shift in mindset.
And I just became, obviously started to think a lot differently and how to treat people.
But look, I'll be, again, we've got a lot to jump into, obviously, when we start talking about pre-approvals and that sort of thing. But for our listeners, and you I'm obviously a little bit older. So years ago, we used to, if we wanted a loan, whether it's resi, commercial, doesn't matter, whatever it is you want. If you wanted to borrow money, you'd go to the bank. You'd go and see your local bank manager, and you'd probably know them by name, and you'd have their mobile, or not even a mobile back then, but you'd have their direct number, and you'd talk to them. The mortgage business, the mortgage business is obviously,
It's only Tuesday, mate.
it's obviously developed, and it's changed a lot the way
big
that people borrow money.
But it's a good point. When I first came into the market would have been probably around about the 45 to, I'd probably say 45 in 2004, 2006.
Yep.
As it stands today, 75% of the people go through brokers. Now, just for the listeners out there, I want to break it down as to, there's a lot of brokers out there. There's 19,000 brokers. I mentioned this offline, 19,000 brokers out there. Now, there's only probably about 48% of that numbers that don't take it full time, do it part time, whereas the majority of the other sector, there's 9,500 of us, do it full time. Now, the banks have made it a little bit harder for you to have access to someone in branches. Right now, I'm not going to pull the banks apart, but a lot of people within the banks that you may go to don't have the qualifications as brokers do. Brokers are highly regulated. We have to go through a lot more protocol. So the market has shifted, and I think it's going to shift even more in the next 5 years. I think there'll be less brokers, but also the banks, mate. We make up 75% of the market, and we produce a lot of numbers for them.
So you're big on numbers, and thanks for sharing those stats, because for those people that may be fresh into the market and working with a broker, you may not have understood the backstory there. But obviously when you're working with clients looking to buy, first home buyers, upsizers, downsizers, a lot of people come to brokers to be finance ready, and they'll ask for the pre-approval step to take place. Talk us through what's involved there and some of the struggles that you're finding buyers are having in that space.
Yeah, so 100% I can help you with that. What I would suggest for your listeners as well is to make sure that they're dealing with the right broker that's going to align with their financial appetite. Number one. Now, find that out is their website, making sure it's kind of, it's like you guys with Streamline here. Also, there's Google reviews, but also does their website really kind of work with that first home buyer market? Now, the first home buyer market is actually growing. It used to be 25%, but I think nowadays we're starting to roughly get, for the last 12 months, transactions taken up about 35%. So it's growing,
It's a much bigger segment, correct?
Yeah, and I often find I run our business more so now, but what I do see from the brokers that we obviously have on panel and within the business, the pre-approval, a few of the banks don't do it now. They've gotten rid of it. That's typically where I've found, and that has not changed since I've become a broker, that's where people start. They want to know, which makes complete sense, where and what they can borrow. Now, as a broker, you've got probably 45 lenders on panel. It makes complete and utter sense to deal with a broker. Number one. Number two, with those other tips that I gave you, website, Google reviews, and making sure that they align with their strategic goals. But also the biggest thing is that once they get pre-approval, then they can sit idle for for 90 days, because a pre-approval lasts for around about 3 months.
Correct. That's right. Yes.
And you can get that. The banks don't charge you for that, and it goes into your credit file. But as I keep saying, is that picture it this way for the people that are listening, is that the banks have got it like a tiered system. If I put an application to the bank, and CBA are notorious for this, is that it will just hit a system now more so with AI, and it just collects data on you, and it's like, yes, would pre-approve you based on what you've put into the system.
That's right. Yes.
Doesn't go past the gatekeeper. Right. And it doesn't
go to credit.
Doesn't go to credit. It goes to, so the tiered system, right? So if I put an application in today, it goes to one person who culls it, second person who actually goes, yes, this is a deal. And then typically you've got the third person on the other end, like a mortgage insurer or someone else, to go, everything in this file is checked.
Yes.
Then that's a tick. That's a proper pre-approval. But then I know we're going to get into it with the pre-approval, with what they struggle with, but then they kind of somewhat sit idle. Then they go on this journey with buyer's agents like yourselves.
Or by themselves.
Or by themselves. And I remember reading a stat as well. The average person can take up to 300 hours looking for a property. You can become disorientated with that, right? And then I often find with the first home buyers, they'll throw an offer in, and they think this is it. It's the property of their dream. It's got, and then they just get pulled from pillar to post from the agent. And then they think that they're obviously going to move into the property, but at the same time, it's like they then get kind of disorientated. They get the morale goes down. If they don't get it, then they're on to the next one, which you get.
Yeah. And I guess in a market like Brisbane at the moment, it's a very competitive market out there. So for an inexperienced buyer who may be going through this process for the first time, or even a buyer that may be going through the process for the second time in their lifetime, it can be extremely overwhelming, as you've mentioned, extremely time consuming. And if you are missing out throughout that process, it can actually be this emotional roller coaster, of highs and lows. And that is really the journey that a typical buyer will take in a competitive market. So right now, Brisbane typically is a strong seller's market. That means there's more buyers in the market than there are properties available for sale. So even buyers that are finance ready with their pre-approval, which is step one, perhaps for being in a position to make competitive offers, it is literally just step one, and buyers then need to be prepared for what's next to actually move from, I'm a finance ready buyer to actually now I've purchased. And there's a lot of things within that process that a lot of buyers are missing. And you've rightly pointed out, a lot of selling agents can take people for a ride, especially when they're inexperienced and they don't know the rules of the game.
Yeah. Before they even get to the agent, right? So they're with us, like from a finance broker's perspective, they're with us for about 3 to 4 weeks.
Yeah.
And if we kind of break it down right from the start for the people that are listening, it is imperative that you sit with the broker to go through. I'm a big believer. It's cash flow. Cash flow is like the foundations of a house.
Yep.
Everything's got to do with cash flow.
Yep.
I think once a person breaks down that cash flow, that will then give them the confidence to go, right, we know what we can do.
Yep.
Rate rise, rate reduction, change in circumstances, future plans that they may have, right? And then you break down what the bank and the lender and the products, which is actually somewhat the easy part. And then they've got this document in front of them to go, okay, well, we're ready to go. What do we do now?
What's next?
And the broker, and typically if you've got a first home buyer, people that are buying again, or seasonal investors, commercial, the first home buyers take up a lot of the time. Now, I'll be completely upfront. A lot of brokers will not give the time of day to first home buyers. If you're an individual broker and someone's really, really busy, they need you a lot more.
Yeah, of course.
Right? That broker may look at you and go, it's a pre-approval. No, I'm too busy for it. So I know a lot of brokers and banks to a degree probably segment the pre-approvals and don't do them in a priority phase. So also as well, it's that once they go into that kind of wilderness and out there, they then send us properties and we'll give them RP data reports. They may not be completely 100% spot on because the data doesn't reflect it.
Because automatic valuation reports are not accurately reflecting market value.
100%, right? And
Absolutely.
then they talk to an agent, and what really gets under my skin is that the agent just looks at them as if they're just a commodity, right? It's like, mate, these guys are first-home buyers, right? So they don't even phone them back. I typically, correct me if I'm wrong, typically will say to the young first-home buyers, you probably get 2 cracks at it. Maybe your first offer is test the water. Your second offer, well, and then you need to know if there's other offers on the table. You need to make it the most attractive but odd-looking kind of offer with the terms and the conditions, plus also maybe the price, So I know we're probably getting a little bit ahead, but while it's forefront of my mind, it's like, well, if that property's listed for 900, make it a 902,500 kind of offer so it stands out, right?
Yeah.
But yeah, look, I do feel for them, and they do need a lot more care.
Of course.
It's interesting when you say you might get 2 cracks at it. As an example, we had a property on the weekend that we went and looked at. There was 16 offers, I think, went on that one. So there's a lot of people missing out. When you're missing out and you get, and this is obviously to help our listeners, I know we understand a little bit more. You get a pre-approval, you miss out, it gets frustrating. This is when people usually start to reach out to us at Streamline because they're a bit frustrated at missing out and time's ticking away and their pre-approval's about to expire. Do they have to jump through all the hoops again? Like, what happens to those people then that their pre-approval is going to expire and they need to renew it to obviously continue the search?
Well, it's just updated pay slips, bank statements, making sure that, so I have to admit, we've got a really kind of U-Butte on portal systems. So everything sits within a portal that they complete, like a fact find. Yep. That typically takes about 10 minutes. Then we'll shoot them back the link. Everything's on the link. I've not had one negative response back. It's from our aggregator. But then we'll ask them, hey, has anything changed within your circumstances? Give us some more pay slips. You can re-trigger it back through the bank. Some banks actually won't let you, would you believe? So they've kind of gone, hey, because I was told, whether this is true or not, I'm sure some of your listeners might chat GPT it, but 45% of pre-approvals do not go anywhere.
That's
with the
an
bank.
Interesting stat.
Now, you look at it from a bank's perspective, and this is probably why I reached out, was 45% go through the banks. The banks are like, well, there's 2 banks I know off the top of my head. They go, we don't do pre-approvals. Well, because they would rather spend their money and their resources in places that are going to help them get through on people that are ready to rock.
Correct.
Well, that's why they need us more. So to answer your question, Scotty, is that if we don't put them back through, what we'll tend to do, and this is probably one thing I will encourage your first-time buyers to do, make sure that you've got Equifax, EQUIFAX.
Yep.
Equifax is the best friend for a first-time buyer. You can pay $9.99 per month and have a subscription there. And if anyone hits your credit report, you get an alert. Okay, that is imperative that you have that as a first-time buyer.
There's a great tip there. If you're not, tuning in, get your pen and paper out and write that down.
I've got it, and it's probably the anyone that hits it, right? So if that's tarnished within that period, now the younger generation, they move, Telstra bills, you get it, right? That the credit scoring is imperative. So to answer your question, just in summary, is that what we will typically do is we won't put them back through a pre-approval phase. We'll just go, hey, pay slips, send them back the link to make sure everything is correct. Plus also send them a link to the Equifax and then make sure that you get that back and that's still okay. And then you're like, mate, you're fine. If you go to auction, different kettle of fish.
Yeah, of course.
Which we'll probably get into later.
Absolutely. And I think that the critical issue here is there's a reason some people are getting all of that upfront work done, but then not buying. There's a reason that there's 45% of those pre-approvals that never actually translate. Based on the people that you're working with, Barry, what are some of the reasons that the potential buyer is telling you as to why they're not actually finding the right home?
Oh, God, we could probably delve really into this, like psychologically, but also I actually quite attracted to people's behaviours, right, when it comes to this, and just in general with finance. I typically think that they're either talking to people that are not qualified, like parents or
family and friends,
barbecue chat. Yeah.
Yes.
So they're letting them know that, hey, we're pre-approved, we're ready to go. And people are typically like, we've been approved for this amount of money. And then then they get jaded.
Yeah.
But also at the same time, my demeanor is quite aggressive in this part. And if I could say it to a younger Barry, it would be, don't worry about paying an extra 10 to 20. Just put your best foot forward. Then you at least know. So we often find is that they're speaking to too many people.
Okay. Yeah.
That are unqualified.
Yes. Yeah.
And then they're getting onto RP data. Now you and I both know not RP data.
Realestate.com.
Sorry.
Yes.
Realestate.com. Once a property has hit the market, it's typically gone in that sector for a first-home buyer, right?
Yeah.
So maybe their approach is, my suggestion is like, well, as soon as we get people pre-approved, I encourage them, even sometimes before they're pre-approved, is actually to go out there to open homes to get a feel.
Yeah, 100%.
Start to get an understanding in terms of how does negotiations work, why people selling, so asking questions. So for me, it would be, as soon as you get pre-approval, I wouldn't even worry about the next 10 to 20 grand if you're worried about that. But or ultimately, it's like, stop engaging to people that have no idea.
It's interesting that you've mentioned, the advice is let's just stretch that little bit to secure the right property. Of course, the difficulty for most buyers is they're not actually understanding the true value of the opportunity in the first place to know, well, what is a $10,000 or $20,000 stretch on the potential price? A lot of agents in Brisbane and surrounding areas will advertise a price at a very low value. If there's a listing that appears on realestate.com, and there was a classic example just last week, listing appeared, offers over, and there was a stated value. Now, every day of the week, every one of the buyer's agents in our team looked at that and said, there is no way that property will sell for that price. Now, the agent encourages a lot of people to come off the back of a listing that is technically lower than where it will sell. It is illegal, bait advertising. You shouldn't advertise a property at a lower level, but it happens, unfortunately. And what that does is it puts a false sense of hope into a lot of people's property buying journey. They turn up, there's a lineup out the door. Straight away, there's that sense of FOMO for the buyer. They're immediately feeling that there's high competition, so it elevates emotions. They go through the property, then there's pressure. The agent says, we're closing offers at 5 p.m. today. So now we've got less than 5 hours to make a huge financial decision as to
One
whether
of the biggest ones ever.
The right home or not for me. And that's a lot of pressure. It's like a pressure cooker environment for a buyer. So straight away, there's this element of being misled on price. There's no ability for a buyer to really provide an accurate number to give them the confidence to say this is where the value sits, because they don't have necessarily access to the resources that a professional team of buyers agents may have to accurately price that property. So they're a little bit blind. They can look at the sold tab of realestate.com to get an understanding of what might have transacted previously. So they're a little bit uncertain on value, and then they've got this pressure. We have to make a decision within the next few hours, and that actually just can quite often result in nothing. It can result in people stalling and saying it's too hard, I'll wait for the next one. And every time they wait is a potential opportunity cost as the market continues to shift. And that's what we typically find. By the time they're reaching out to a team like us, they've been through this process, this roller coaster emotional journey multiple times. And they may have missed out not just once, but sometimes 5 or 6 times over a period of 6 months.
It's interesting. You made a point just before about we often find that the first home buyers will say, I've typed in the property price and this came up, knowing full well, like you mentioned. That's actually probably one of the biggest ones. And it's like, it's unfair.
Yeah.
Because we all know. But also one of the other things I quite would give myself advice as a younger myself would be going into a property, having a look at the opportunities. And Scotty, I know that you're an ex-builder, right? So it'd be like, I often say to the first-time buyers, you've got to upgrade the kitchen, the bathroom, the deck. Think about that. Think about the big picture. And if you're looking at a unit, or because we're finding a lot of them are looking at units as well, Mel, and townhouses. And you're like, well, and they're like, but why should I do? I'm going to be missing out on houses, right? So, but also as well at the same time, it's like, well, I look at that to go, well, that's it. I often find with first-home buyers, they either go, well, I want a property. Because everyone's got a property. Well, I think the mindset needs to change a little bit. Also, at the same time, is that maybe your kind of search needs to change in terms of broader. By that, I mean looking at property outside of the 8K radius, but also looking at units and townhouses at just that stepping stone for the next.
Yeah.
The stepping stone is a big one. And I'll probably, some people might get offended when I say something like this, but I've got 3 boys. Okay. So I can say things. The younger generation, I find these days, some of them, I won't say all of them, want the best straight away. So they want the brand stuff when they go and buy the clothes and all those types of things, as opposed to doing some hard yards. I remember when we first started out and we bought our first home, I used to get all the mates around and I would put on sausages and beer. The value of sausages and beer,
working bees,
incredible, and I'd get everyone to do the work for me, and I would just flog them. They would just work. But
paintbrush here.
What I'm getting at, and I love it. We helped a client just recently, a young couple,
first home buyers,
wanted to get in the market. With their budget, they were struggling, and they were then saying to us, "Oh, we're looking at this main road, or we're looking at like the locations." And we're going, "Oh, really?" And we were struggling to say, "No, you don't want You don't want to be on a main road. You got to think big picture." We end up buying him a house in a fantastic location, a lovely neighborhood, really nice people, demographics live there. It's really nice. The house needs a little bit of love. It's livable, but down the track, they can probably put, as you said, we can knock a wall out. I went in with them and we said, look, we can knock that wall out. We can open up the kitchen later on. You can do a bit of painting here and you can tidy up a few things. They're in a perfect location.
They were compromised on budget, and so they were willing to make the compromise by saying, "I'll buy on a main road because I can't get anything within my budget otherwise." From engagement to contract, it was less than 7 days for them, and it was an opportunity they never would have found on realestate.com because we bought it pre-market. So these opportunities exist. Sometimes people just have to open their eyes to the opportunity.
And we can change that house. but we can't change location.
That's
No,
right.
that's right.
So we can buy that house in that location, really good location, and we can improve it. I always say to people, the house is going to get old. It's going to go down in value unless you manufacture equity into the property.
It's funny. Your sons are my daughters are 13 and 9, right? So what would I say to them in 4 or 5 years' time when they're 13-year-old? Well, I would typically say, well, I would love her to get a unit.
Yep.
So for her and her sister,
Yes. Yeah.
get a unit. That's a platform for maybe 5 or 6 years down the track when they can go overseas, but it's still an investment,
That's right. Yes.
Scotty, you mentioned just before with first home buyers, right? I would slow the process down for the first home buyers that are listening. Okay, they've got FOMO, they've got Instagram,
right.
they want to do things quickly. I would, for those guys, it would be like step out for the next 5 to 10 years where you see yourself as a couple or individually.
Yep.
Then you work through what are the opportunities available out there and making sure you align yourself with the right broker, the right real estate agent, the right buyer's agent, and everyone else around you, just to take snippets to go, okay, collate all this information, that data, but I find they need to measure where they need to be within 5 to 10 years. That's what I'm finding with the younger generation, right?
Yep.
So, but also as well, first home buyers may not know that you can use parental guarantees. Now that's our 10th biggest bank here in Australia.
Yeah, mum and dad bank.
Yeah.
Mum and dad bank. And then that's huge. Now you mentioned just before, what I loved with first home buyers that are in this position. Now, for people that are listening, if you're looking at buying a property on your own, but mum and dad have substantial amount of equity, you can leverage off mum and dad to purchase that property, and they go guarantor. Now, why it's advantageous is that, let's say, for example, you have $100,000 deposit on that $1 million loan, on that $1 million property. If you leverage from mum and dad's property, you can borrow the full amount of $1 million, and that $100,000 that you've got left over after stamp duty, you can do the bathroom, you can do the kitchen, and it's got instant equity. I used to love saying that to first home buyers because their eyes would light up, and you're like, so the property would be worth 1.2, 1.1. 100%, and you could sell it then if you wanted to. So I just think that they need to take a little bit more of a measured approach. Stop Googling as much, information, and embrace people that have got reputable, good reputations would be my advice.
It's great. It's great advice, Barry, because I know you only have to look at an Instagram feed or even on LinkedIn. There's so many people out there with big promises, but there's a lot of substance that's lacking in their messaging. And I think it's very easy for people to be lured into the great Australian dream without good, strong professional advice. That's risky. And I feel that having a team that is experienced, has been through it multiple times, has guided others through it multiple times, understand that long-term play, not just the transaction that's on the table right now, that can be a game changer. I'm a believer in investing in education as well. So for first home buyers, that first home that you buy is the home that can set you up to continue to leverage to build an investment portfolio or other assets, because you have the ability to leverage equity, and getting advice in terms of what does that mean. And for those listeners that don't even understand some of this terminology, it's what you don't know that gets, sets you back. And therefore the team around you can teach you this information that can be so beneficial for you well into the future. So I think, don't underestimate the value of good people around you.
100%. I mean, I wish I invested into the ASX a lot earlier than what I did. Well, you don't know, right?
That's right.
You mentioned just before, Mel, education. For me, it's probably one of the burning for why I do what I do every day.
Yeah.
I love to actually show them, hey, you want to educate you in terms of how do I get this investment property? 13% of the population only have an investment property in this country. There's, call it 14 million Australians working. Why? Ask yourself why. Well, what do they do that you do differently? And if you want to get success and you want to build that portfolio, honestly, just replicate what they do.
That's right.
It's not rocket science, right?
Right.
But I think with the first home buyers, I keep coming back to it. It's like, I love to map out, tell me what you want now and in 5 years, and we'll work together. I think mortgage broking is going to change as well to that part where it'll have to become more of a finance kind of financial planning-esque
Advisory.
feel. Yeah, it's like, tell me more now and where we want to be, and we'll work towards it.
I can't, sorry to jump in there, but I can't underestimate the number of buyers that we partner with that come to us with a mortgage proposal from a broker or directly from the bank. And when we start to question their long-term plans, we quite often prompt them to go back and ask more questions. It's the questions they don't even know that they need to ask that can often result in the wrong finance structure for the purchase that they're making. It's not about the purchase you're making now. It's about what you plan to do with that purchase or with other purchases in the future that can change the way you might structure that and the advice that someone like yourself might give. So I think for anyone that is a bit unsure, if you're going to a broker and they're just giving you a loan without explaining or why this is best suited based on what you're planning to do with that particular property that you're buying, ask more questions. What if I was to sell this? What if I hold this? What if I convert this into an investment property in the future? These are questions your broker should be asking. If they're not, I'd question whether they're the right match.
Well, if you look at the mainstream banks, if I put you with like, call it the Suncorps of the world, INGs of the world, Macquarie's of the world. Well, not probably Macquarie fall into that category anymore. They're probably one of your top 6 now. Well, they're conservative by nature.
Yep.
You know, like they're conservative.
Yes.
So would you want to be aggressive with them in 5 to 10 years' time? Probably not. But they have their place in the market.
Yep.
100%.
I think one big thing there, which we all obviously agree on, is getting some knowledge. Learning. We're huge on that here at Streamline. We will educate our clients about everything so that they are informed, they're educated, they know what they're talking about. The same with the finance. I think ask the questions, learn a bit more about it, and understand the strategy behind it.
You know, I'm smirking there, Scotty, because I often hear, but let's say we were friends and I approached the mortgage broker and I'd be like, yeah, but Mel and Scott can do it. Why can't I? Mate, if I had a penny for every single time, not knowing that they don't know your circumstances.
Yeah, of course.
So for any listeners out there that are listening, whatever they're telling you, you know, I'd probably look under the hood a little bit more and find out more.
But have a strategy, whether it's through finance or whether it's through purchasing, whatever you buy, and this, whether it's a first home buyer or someone else that's getting into the investment market or continuing or growing their portfolio, you should have a strategy. Because if you don't, you've got nothing to follow or you've got nothing to push towards or to drive to. You need the strategy to actually say, this is my time frame, these are my goals, this is what I want to achieve. How am I going to do it?
Well, we've just had someone join us from a bank that he was with for 10 years. And it's interesting trying to change his mentality from bank-like to broker-like, right? And one thing I left with him before in the office, I said, your main job is for someone to leave an appointment educated.
Absolutely.
And what can I do?
Yeah.
Not what can't I do, what can I do?
Yeah.
And how does it work?
It's a really good mindset, and I think it's something that we apply here at Streamline Property Buyers as well. It's not just about purchasing a property, it's about educating and providing confidence and really facilitating a transaction that becomes an empowered buyer as opposed to a really non-confident buyer.
Also, it's really important. I remember I would probably suggest for the first home buyers out there, they'll Google what's the cheapest interest rate in the market. My suggestion would be sometimes you can be pigeon you hold yourself to a point where you've gone for the cheapest, but then the criteria with the bank's policy will make it that will make it a little bit harder for you moving forward to adjust. So, you know, it's about the most suitable rate for you. Quick scenario. 2 days ago, there was a guy, I was chatting at the coffee shop. He obviously saw our shirt and he obviously knew what we did. He's like, I just bought a house. I said, oh, mate, got a first home buyer. But he fixed a portion of his loan.
Right, wow.
At the moment.
Yeah, when interest rates are likely to come down.
That's right. So he's fixed a portion of 5.79 with a bank. And I said, why did you do that? He's like, well the broker, went through the broker. The broker suggested we go 60-40. I said, mate, well, the interest rates are going to come down. We're probably going to land at around about 3.10, which is the cash rate. So in theory, 1.4 to 1.5 should give us around about 4.6. And then we did the numbers and I'm like, mate, you're paying an extra $6,000 just for that right now.
Yeah.
And he was like, oh, he was frustrated, of course.
Yes,
but that's the thing right now. A lot of brokers may do that. And I'll tell you why they do it. they'll either lock that client into their portfolio, which is the wrong thing to do.
Yeah, it's not ethical.
You know, like he had no kids.
Yeah.
He didn't. There was no reason for him to lock it in, by the way, because I investigated that part. So fixed rates, really be careful for people out there at the moment. I find that the banks will get into a bit of a war pretty soon, where their fixed rate will be very, very sharp. Be very, very mindful. People that are looking at fixed rates, in all honesty, first home buyers, people that are maybe looking at starting a family in 3 or 4 or 5 years' time, that's relevant. Cash flow is king. If you've got a really good surplus, then typically people stay on variable rates. In Australia, mate, we only have 2 products. We only have fixed rates and variable rates. The banks will polish it up to make it look different. Trust me, there's only 2 products. So I wouldn't fix at the moment. And probably as well, with the rate reduction, your borrowing power does actually increase. Yeah.
All good advice there. And I think for anyone out there that is considering purchasing, needing to get finance ready, we recommend that you reach out to Barry and his team at SW Brokerage here in Brisbane. All of the details will be in the show notes. But Barry, how do people get in touch if they want to reach out?
Yeah, just jump on the website, swbrokerage.com.au. You can have a look at our Google reviews. There's about 280 there. Yep. Just a little plug.
That's fine.
But, there's a 1300 number. You can jump online, leave for one of the specialists to give you a call back. Yep. Also just some final, Mel and Scott, I think it's really important to remember is that where the rate reductions are starting to come down, on average, say you had a $750,000 loan, and in theory, when the cash rate gets around about 3.10, call it say 4.6, well, the repayment per week is $700 a month. Now ask yourself the question going, for the people out there right now that are listening, how much are you paying rent? You're paying off someone else's mortgage.
That's right.
That's all the way that you got to think about it. And whether you're ready now, whether you're ready in 6 months' time, my suggestion would be is engage now. Like start talking to you guys at Streamline. Like, how does it work? One thing I think, just to give you guys a bit of a plug as well, is that we recently had a client that we transferred over. He was out in the wilderness. Sometimes you you got to let him go. And then he spent countless hours, and he was so grateful that he went through the process. In terms of obviously the finance part, in terms of paying for a buy, that didn't even come up. It did not come up.
Because he knows the value.
He understands the value of it, right? I think that a buyer's agent, I honestly believe the good buyer's agents will start to kind of outweigh real estate agents. And I think if you've got the capacity to stretch your budget for that 10 to 15 or 20, pay a buyer's agent, engage just how does it work, and then your finance, and then we'll both work in tandem to get you into that place. Because in 5 years' time, you won't even worry about that.
That's exactly right. And it is about, property is a long-term asset class. It's not, majority of people are not buying into property to sell out in 12 or 18 months. So by the time you, apportion out the cost over many, many years of getting professional advice up front, quite often that can result in millions of dollars of untapped equity if you've bought, an inferior asset. And a home, in my opinion, regardless of how long you live in it or what the final intent is, it becomes an asset that helps you to build an investment portfolio because you can leverage the equity. So making smart decisions when you're buying homes will really help you to advance in wealth creation as well.
Can I just leave you on this final point, is that I think that I know that the average first home buyer's age in Brisbane is around about 36 to 35, right? Years of age.
Yeah, right.
From 24, when you've left school, you've had your fun, you've drunk enough to probably sink a ship, and then you're renting, right? So if you're about 25 to say 35, well, you're earning probably pretty good coin, right?
That's it.
My point here is that, okay, well, whether you then purchase a property at 35, from 35 to 55, you're typically going to get married, have kids, or you've already got it. Well, within that period of 35 to say 60, you either want to get enough equity in your property to purchase an investment property. You know that stat that I gave you before? I think it'll diminish. I think 100% the amount of people have got investment properties. So the gap for the richer will get bigger because they're buying more stuff, right? So any first home buyers that are out there below the age of 30, and if you are thinking about doing this, seriously, you would be surprised at what you can borrow. If you've got a good job and you've had it for 2 years, if you've got a car loan, don't let that be an obstacle. If you've got parents that are sitting on a fair bit of equity. And also as well, what we are starting to see is siblings buying something together.
Yes.
Brothers starting to buy something together.
Yep.
Friends starting to buy it together. That's where the mindset needs to change, right? Because it's like, just get in.
Yeah, get in the market.
Get the equity. And then, if you then move on and someone meets a partner or what's not, you can then use it as an investment property.
That's right.
It makes complete sense. So, I think that, God, we can get into retirement at a later stage, but typically that's where you'll probably find people will pull the trigger. At 35 years of age, then typically either both working and they've got a child. Your borrowing capacity goes down.
It drops. Absolutely.
We could probably talk all day, but we better not. We'll get you back on again. Definitely. I'm sure our listeners would love the information you've shared, some of the tips.
Mate, I'd love that. Yeah.
Given,
There's so much more out there. It's not funny.
Yeah, we'll definitely get you back for another chat. Mate, look, thanks very much for joining us. Really appreciate it. As Melinda mentioned, SW Brokerage, we'll put the details in the show notes. Reach out for the guys. You can tell Barry and them the service they give, the education, everything for their clients.
I've got 2 awesome first-time buyer guys in the office. You'll love them.
Yep, perfect. Thanks, guys, for listening. Hopefully that's been good information. As usual, I will let Melinda wrap things up for this week. From myself, take care and bye for now.
Thanks again, everyone, for joining us on the Brisbane Property Podcast. We hope you've enjoyed this episode. As always, if you would leave us a review, we'd be very grateful. 5 stars if possible, but also share the episode with friends and family, especially anyone that is looking to get into the market to buy their first home. There's so much value that's been shared today. Thanks again to Barry for coming on, and we will talk again soon. See you next week. Bye for now.